Ladies and gentlemen, good evening. It is the 23rd of March. It's Wednesday evening, and we had a major down day in the gold and silver markets today. We're going to put that into perspective. It's very important to not get too caught up in the short run unless you are a short-term trader, in which case you have a completely different set of criteria that you have to follow. I do some short-term trading myself from time to time, but I happen to believe that the stage that we are in the gold and silver markets right now is better suited for at least an intermediate term perspective, if not a long-term perspective, with, of course, some adjustments along the way. So we're going to look at all of that today. It's a good time when you see these weekdays to really ask yourself what type of investor you are. Whether you fall into that short term, are you looking to profit from even the hour-to-hour moves? Or are you looking to build some positions that are going to take advantage of what we believe is a historical revaluation that is just in the very first of the half inning of this game unfolding right now in front of us? So let's look at the action. We'll start that coming up right now. Thank you again for tuning in. So yes, as we look at gold, quite a weekday today, and the interesting thing to note about this, down about $30. So this is being filmed right around midnight Eastern time in the United States. The interesting thing to note here is when the original signs of the weakness started to show up. And you could see that right here from yesterday in Asia. So Hong Kong and Sydney, we saw the beginning of the selling. You can really see that here, which was still in the Asian hours, that first drop that broke the support right around 1240, the short-term uptrend. We'll see that break later. We kind of continued sideways through London, and when New York opened, continuing lower and continuing lower again in Hong Kong tonight. So absolutely some weakness showing up here over the short run. Let's put this into perspective. So we had been looking at this uptrend that had been forming here. That has been broken since the break of the October high. Now, we are still above this October high, and I believe that is a fairly important thing to keep in mind. This level, right around 1190 on the spot price of gold, which corresponds to this 114 on the GLD fund, this level was an important resistance level that was broken decisively in February and is now coming back to this level. So we're no longer in this gently sloping uptrend. It looks at this point like we can say we are just basically consolidating in this range above the support zone. So it looks like a retest of this support is imminent. This could even happen today, Thursday. Now, we have to keep in mind that here in the United States, which is still the bulk of the world's trading, we have a holiday coming up on Friday. So it will be a shortened week. It's Good Friday on Friday before Easter Sunday. So it will be a short week. We only have one more trading day to go. This could get pretty interesting. This could get pretty dicey over the next couple of days. This could be a real gut check for people, scare a lot of people here over the short run, especially if we do not get this retest tomorrow. A lot of people will go into the long weekend with a sense of uncertainty, which is challenging. It absolutely is. It's challenging to enter a 3-day weekend expecting to see a retest of a very important support zone. So let's flip this over to the gold mining side. Now, this is especially for my premium subscribers because we are heavily invested in this sector. And as we've seen, we can have a number of positions that can move significantly higher even as the sector, as referenced by this GDX fund, is basically just consolidating in this zone below 21.5 and above 18.5. We've had a few positions that have had nice moves. Now, some of those gains were given back today. This was a strong down day, down 7.5% across the sector with a 2% move down in the price of gold. So, not a great day, of course. However, as we were discussing in the previous premium update, we are looking at this still. Notice where the down selling stopped here, right above the lows from the previous couple of days. And indeed, we had a few down days like this. Look at this one from last week, right here where my mouse is, down, and then opening a little lower the next day, followed by a rebound. So as of right now, this still looks like something that is trying to consolidate here, and that would be very constructive to see over the course of the next several months if the sector were to continue consolidating. And I strongly believe that some of our investments will be moving higher even in a sector consolidation because we have some really strong potential investments. Now, if we see this initial support break here, this is going to be the time that you really need to ask yourself what type of investor that you are. Like I was talking about in the beginning of this video, we have this initial support here right around 18.5 on the GDX. And if this gives way tomorrow, we are going to be looking, as far as every bit of analysis that I can see, we're going to be looking at a move down to somewhere in this 16 to 17 range. The strong support, which was a high back from October, broken decisively with a 70% rise over the course of 6 weeks, an impulsive move higher, which then needs to take a pause at the least and potentially needs to have a mini correction. So what I'm saying is you have to decide what kind of investor you are. If you are looking to try to sell at every one of these little peaks, such as this one here, and buy back everything 2 days later, and sell 5 days later, and buy back 3 days later, and sell 4 days later, etc., etc., that is a very stressful strategy. I'm not going to lie. I have gone through experiences like this myself where I attempt to do this kind of thing, and it requires you to sit in front of the computer all day, biting your nails, and trying to time the exact low that the sector is forming. And then to make things even more challenging, some of the investments will not move down with the sector. So, of course, there's the chance of selling an investment which then does not move down even though the GDX moves down. So it's important at this point to really decide if you are a premium subscriber or if you are making investments in this sector on your own, individually. It's important to decide what kind of investor you are now. You know my thesis, which is that the sector basically forming this bottom here was a generational low. We are talking valuation metrics that had not been seen for 40 years. When you are referencing the value of the gold mining sector versus the broad stock market or the gold mining sector versus the price of the metal itself, you're talking valuations that had not been seen in well over a generation. So a strong move here, an impulsive move signaling that this long-term downtrend that we had seen had broken, and now you're looking at some sort of either a consolidation or perhaps a correction. And you have to ask yourself, are you someone who is going to be trying to trade every swing of this every couple days? Or are you looking to make some serious life-altering gains that we have just seen the first hint that is possible? I fall into the later category in general. I generally like to trade, when I'm doing short-term trading, I like to trade intraday. So sometimes a trade will only last for 2 or 3 hours. That's my preference because I don't like to hold futures or ETFs overnight. It's too risky to me. So I combine a short-term strategy with a long-term investment strategy. And those are two concurrent strategies that I entertain. But you have to decide that for yourself, what your tolerance level is with that. So if you fall into the category where you're looking to make these long-term investments in a generational revaluation that is just, we're talking about something that's only 2 months underway. This could last for 10 years. You have to say, is it worth selling all of your positions here at the GDX around 19, hoping to perhaps buy them back 10% or 15% lower around 17 or 16? And what if it doesn't move all the way down to this level? What if it only moves halfway and the next wave of buying comes in and shoots higher? Is that worth it to you? I can't answer that question for everyone. All I can do is tell you what has worked for me in the past and what we are aligning for as far as our strategy. I'm going to move that back down, switch back over to the gold chart, the GLD, and then zoom this out. Very important to keep the big picture in perspective here when we see these corrections. We're looking at the spot price of gold over 7 years, extended in the future. And so we have decisively broken this downtrend here, shown in the turquoise color, only to come up, not quite hit the level I was looking to test at 1305. We came to around 1285. And now the price of gold is coming back down. So it looks like it's making a retest of this broken trend line right now, which would come in somewhere around the 1200 region, only about $15 lower than where we are today. And this corresponds very nearly with the 1190 high from October. So we have a confluence of two support levels, 1190 and 1200, that we are looking to see if gold is going to act technically how it should, which I would say about 80% of the time the gold market moves in a very technical way. About 20% of the time it does not. So about 80% of the time we would expect, when we see this break here, to then look for this retest of this line at exactly what we're seeing right now. So this could even extend down to about 1185 on the low, just to let you know what I would still consider valid, about $30 lower from here. And how much lower would the gold mining complex go in such a retest of 1185? That'd be hard to say. Probably another 10% lower or so. So again, would it be worth trying to trade out every single position and then trying to re-enter it a few days or perhaps a week or two later? For me, it's not worth it. There's taxable consequences. Long-term investments receive better tax breaks than short-term investments. In addition, to me, I don't like to be trading these companies in and out every couple of weeks, but only you can decide that for yourself as we identify the strongest possibilities for what we are looking at as a generational move here. Now, this is very important to keep in mind, especially in the type of weakness that we have seen. To remind everyone, we haven't looked at the long-term scale for over a month now. This is the 35-year perspective for gold. A high in 1980, 29 years below that high, followed by the final break higher in 2009, which lasted for only 2 years, and then coming back down to the breakout level. The first expected low of our retest zone that we said was right around 1030. It actually hit about 1045, which corresponded with this black line right here. The buyers from 2008, the buyers from 2009, the buyers from 2010. So we are still talking about this move higher, retesting this zone, and now breaking the downtrend. And so we are coming back to retest the broken downtrend at this point. Talking about the model from the 70s. I wrote an article about this. I'm going to put the link to that below for anyone who's interested in this thesis that is developing. In the 70s, the gold market made a 470% rise, followed by a 50% correction, almost exactly as we have seen over the last 4.5 years. From 1917 down to 1045 was a 45% correction. So in the 70s, there was this 50% correction from almost 200 down to right around 100. Which then, over the course of the next 2 years, fully recovered a 100% move higher to recover that correction, followed by a 350% rise from the previous all-time high. This all-time high would correspond with 1917 on the spot price of gold in US dollars. Now, when we zoom that in, this was the critical point to keep in mind for this model. We're looking at the 70s. We're looking at that 50% drop and the 100% recovery, which took a total of 3.5 years to play out. There was never more than a 9% correction in the price of gold this entire time. In today's dollars, this would be slightly over a $100 correction. 7%, 9%, and 7%. So it is possible for the price of gold to gain 100% without correcting even 10% along the way. So in other words, in today's prices, it would be like gold going back up to 1900 without ever correcting more than 10%. This is possible. This is the model from the 70s that is looking strikingly similar to what we are seeing today, just on a longer-term time scale. So where does that put us right now? It's in this first back and forth consolidation here. After the low, the first back and forth consolidation. Right here. In other words, the 7% drop. It puts us somewhere right in here. The low was at 1045 in the current bull market, and this move higher took us to 1285 before we are backing off with some weakness and consolidating. So this is the model that looks most accurate to me. And granted, so after this weakness, there was really a period of consolidation for a number of months here. But we have to remember the context that this initial consolidation was when you look at this from the perspective of the entire bull market. I believe that gold around 1200 or 1190 or 1180 or 1230 is in this range. A quick bit on silver here. In a way, it's almost easier to be a silver investor at this time because we have been conditioned. By this point, we've become kind of hardy to these drops, right? We've come to expect them. And so to see a move from 16 back down to 1520 in a little over a day, which is about a 5% move lower in one day, we've seen this kind of thing over and over again. And if you're going to be invested in silver, you had better come to love these kinds of corrections. They are part of the business of investing in silver, to have these gut-checking corrections at any time. So think about that, a 5% drop lower in one day. Imagine if the stock market, if the Dow had moved 5% lower in one day. That would have been over a 1,000 point move, right around 1,000 points. There would have been panic in the streets, people calling up their banks to make sure their deposits are safe. CNBC would be running news programs on the crash of March 23rd, 2016. But as silver investors, this is par for the course. We're going to see these corrections, these moves down quite often. Where does this put us? A little bit of a break, as I was expecting, above this consolidation and coming right back into it. I still have a signal that shows me that silver is moving higher. I can only tell you what I see in the charts. So when I look at the stronger silver mining company, Silver Wheaton, we are still well above this October high, whereas silver is significantly below it. So investors in Silver Wheaton, whose profits are largely derived from the price of silver, are anticipating some stronger silver prices to come. Zooming the silver chart out, this is the trajectory, the question on the trajectory that I believe is developing right here. So notice the price almost got to 1625. I think we hit 1605, 1610, representing this high back from October. My question was, is silver ready to blast higher now, up to around 18? Or does it need to consolidate below 16 for the rest of the spring, the summer, and perhaps move higher in the fall, following gold finally in the fall, following Silver Wheaton in the fall? Both of those early warning signals. It's still too early to say. That was a strong move down today, but it's just putting us back in the vicinity of this consolidation. We were lower a few weeks ago, back down at 1450. So this could go either way. I still believe that the low has been put in place for silver at 1365 back in last December. It's a question of what trajectory does it take out of that low. Thank you very much for watching. It is challenging to be a precious metals investor, especially because it's difficult to rely on the mainstream news to provide any insight. I've been through that. I believe in this sector, which is why I produce these videos, but I don't sell the precious metals themselves. I provide analysis according to how I am investing personally and how I'm investing for clients. And so I hope that this can help some people to make sense of what we are seeing Even if we see some continued weakness here over the next day or into the early part of next week after the long weekend, I hope this helps to put in perspective where that looks on the long-term scale. Very important to keep that in mind. I want to wish everyone who celebrates these holidays a happy Good Friday or a peaceful Good Friday and a happy Easter. And if you don't celebrate those holidays, that's fine as well. A happy spring if you're in the northern hemisphere, happy fall in the southern hemisphere. If there's anything crazy that happens in the next day or two, I will produce a flash update on Sunday, on Easter. If not, the next update will be on Wednesday. Thank you very much again for watching. I will see you soon.